Silver has been on an absolute tear lately, hitting highs we haven't seen in years. If you've been holding silver, congratulations, it's been a great ride. But if you're thinking about jumping in now, you might want to pause for a second. While the long-term story for silver looks incredibly strong, there are a few signals flashing right now that suggest we could be in for a short-term pullback. We're seeing some shifts in investor behavior and a few technical indicators that are pointing towards a potential correction. So, what exactly is going on behind the headlines? In this video, we're going to break down the key factors driving the silver market today, and what you need to watch out for over the next few weeks. Stick around to get the full picture. Thanks for watching, and don't forget to subscribe for more market insights. Now, let's talk about what's been happening with silver. We've seen an incredibly fast surge in silver prices recently, a really sharp upward climb that caught a lot of people's attention. But what happens after a rocket-like move like this? Historically, when a price spikes this quickly, a few things tend to follow. First, it puts the asset on the radar of regulators who want to ensure market stability. Second, major exchanges and brokers often increase their margin requirements as a risk management tool. And finally, you see profit-taking traders who rode the wave up start to cash in their gains, which can create downward pressure on the price. Looking at the chart, we can see that momentum starting to slow down at the top. This doesn't mean the party is over, but it's a critical time to be cautious and watch for these key market reactions. Let's talk about a major development happening in the silver market that you need to be aware of. Commodity exchanges are taking action. What does this mean? They've already started raising the margin requirements for silver futures. And if this market volatility keeps up, we could see those margins go even higher. So, why does this matter? Higher margins mean less leverage for traders. It's like needing a bigger down payment on a loan. This forces some traders, especially those with highly leveraged positions, to sell and close out their holdings to meet the new requirements. Historically, when this happens, it puts downward pressure on the price of silver in the short term. It's a key factor to watch as it directly impacts market liquidity and trader behavior. Ever wondered why a market that's been soaring suddenly hits the brakes? It's not always bad news. One major reason we're seeing right now in the data is institutional profit-taking. Think about it. Massive funds and professional trading desks have made huge gains during the recent rally. What do? They don't just ride the wave forever. They start to sell off some of their positions to lock in those profits. This isn't a sign of panic. It's smart strategy. By taking some money off the table, they reduce their risk and rebalance their portfolios for the next opportunity. So, when you see a slight dip after a big run-up, remember it's often the big players just cashing in their winnings. It's a natural and healthy part of the market cycle. If you watched till here and found these insights helpful, make sure to like and subscribe for more market analysis and continue watching as we are not done yet. So, have you ever wondered why a market suddenly drops even when there's no bad news? Let's talk about silver. Right now, the silver futures market is looking incredibly crowded. Think of it like everyone cramming onto one side of a boat. What happens? It gets tippy and unstable. In financial markets, this is called crowded positioning. When too many traders, especially large speculators, are all betting on silver prices going up, it creates a fragile situation. You can see it in the data. The net long positions are at extreme levels. This means the market is vulnerable. Even a small push, or sometimes no push at all, can trigger a wave of selling, as everyone rushes for the exit at once. This is a classic contrarian signal. So, while the sentiment for silver is bullish, the crowded nature of the trade itself has become the biggest risk. Keep an eye on this, because what goes up this fast can sometimes come down just as quickly. So, what's happening with the US dollar right now? We're seeing it flex its muscles again, showing some real renewed strength on the global stage. Now, why does this matter for anyone interested in precious metals? Well, historically, a stronger dollar tends to put a bit of a squeeze on assets like silver, at least in the short term. If it like a seesaw, when the dollar goes up, it can often mean the price of silver takes a little pause, or even dips slightly. This isn't a hard and fast rule, but it's a classic market dynamic that's definitely worth watching. We're seeing this play out right now, as the dollar index climbs. It's a key piece of the puzzle for understanding silver's next move. If you're following the precious metals market, keeping an eye on the dollar is absolutely crucial. Views. Probably seen the headlines. Recent economic data has come in stronger than expected, and it's causing a major rethink about when the central bank will actually start cutting interest rates. This is shaking up the market. For a while, the market was betting on cuts happening sooner rather than later, but now, that timeline is getting pushed back. So, what does this mean for your investments, especially precious metals like gold and silver? Historically, when expectations for rate cuts are delayed, we often see a temporary pullback in precious metal prices. Higher interest rates for longer can make non-yielding assets like gold less attractive for a bit. It's a classic market reaction. We'll be keeping a close eye on the upcoming economic calendar to see how this trend develops. You might have also noticed some shifts in the market, and a big part of that story is geopolitics. Which brings us to the next important factor to analyze about regarding silver's next rise or fall. For a while, global tensions were really high, and when that happens, investors often flock to what they see as safe haven assets, like precious metals. Think of it as a financial security blanket. This increased demand helped prop up silver prices. But recently, we're seeing some of those hotspots begin to cool down. Diplomatic talks are happening, and there's a sense that some of the immediate risks are stabilizing. Even a partial de-escalation can have a big impact on market sentiment. As the perceived risk across the globe goes down, the urgent need for those safe haven assets decreases. This leads to less demand for silver, which can cause its price to pull back. It's a classic example of how global events directly influence our investments. Also, we all know its long-term industrial demand outlook is looking pretty solid, right? Think about everything from solar panels to the latest electronics. But here's a little twist for the short term. Analysts are now taking a much closer look at the latest manufacturing data coming in from around the globe. Why does this matter? Well, any sign of a slowdown in industrial activity, even a temporary one, could put a little damper on those immediate demand expectations. It's not about the long-term story, which remains strong, but more about navigating the next few months. We're seeing some production lines ease up slightly, and that's what has everyone's attention. So, while the future is bright for silver's industrial use, the present is showing a bit of a pause. What are your thoughts on this? Let me know below, and don't forget to subscribe for more updates. Today, we're taking a closer look at the silver market based on what's been happening, and also considering the news since the start of year, till the 17th of January. After that incredible rally we've seen, some technical indicators are flashing signs that silver might be a bit overextended. What does that mean? Well, think of it like a rubber band. When you stretch it too far, it tends to snap back. Markets often behave in a similar way. After a strong upward move, it's completely normal to see a correction or a pullback. We're seeing price action test some key support levels right now. If we look at the charts, you can see how prices are interacting with important moving averages. Plus, the Relative Strength Index, or RSI, was recently in overbought territory, suggesting the buying momentum might be cooling off for a bit. This doesn't necessarily mean the long-term uptrend is over. Often, these pullbacks are healthy and create a stronger base for the next potential leg up. Let's see if you have been watching the charts lately. It looks like prices are taking a bit of a breather after that incredible rally. Some people might see this dip and start to worry, thinking the party's over. But hold on a second. In the world of commodities, what goes up fast often needs to cool down a bit. This kind of pullback is completely normal. Think of it as the market catching its breath. Corrections like this are a healthy and expected part of any strong upward trend. They shake out the short-term speculators and build a more solid foundation for the next potential move. So, instead of panicking, it's a great time to observe and see how the market stabilizes. Now, let's cut through the noise and talk about the long-term story for silver. While short-term prices can be volatile, it's crucial to remember that the core fundamentals haven't disappeared. First, let's look at supply. We're facing some serious constraints in silver mining, which means getting it out of the ground is becoming harder and more expensive. At the same time, demand isn't slowing down. Think about it, silver is essential for so many industries, from solar panels and electric vehicles to the latest electronics. This industrial demand is a powerful long-term driver. And of course, we can't forget silver's historic role as a safe haven asset, a hedge against inflation and economic uncertainty. When you put all these pieces together, tight supply, growing industrial use, and its monetary value, the long-term picture for silver remains incredibly compelling. Alright, let's now summarize the current headwinds for silver and why we might be in for a pullback. There are 5 key risks on my radar right now that you need to be aware of. First, we're seeing raised and potentially more margin hikes, which could squeeze traders. Second, institutions that have been riding this wave up might start taking profits off the table, creating selling pressure. Third, the trade is getting crowded. When everyone is on one side of the boat, it doesn't take much to tip it over. Fourth, the US dollar is showing signs of strength, and a stronger dollar typically means weaker silver prices. And finally, expectations around interest rates are shifting, which can pull capital away from non-yielding assets like silver. Keep these factors in mind as you navigate the market. Understanding what is happening beneath the surface helps separate short-term noise from long-term trends. We're talking about industrial demand, supply chain dynamics, and global economic shifts. Understanding these fundamentals is the key to separating the temporary noise from the true market signal. It helps you see where things are actually heading, not just where they happen to be today. So let us cut through the confusion and keep in mind at what the fundamentals are telling us about the future of silver. 2. Hope this helps you stay informed and make an informed decision. Find the right entry point in the market and invest at your own risk. Thanks for watching, and don't forget to subscribe for more insights.